Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So as in other markets, you can see in the gold there's actually no reaction on the second speech of the Jerome Powell in the Senate. So actually market just stands watching for statistics release, which is in payrolls on Friday. Next week the multiple data on inflation we will get. And actually Jerome Powell said the same. So he gradually redirected investors' attention to the statistics, and he has set some relation with the further Fed policy, with the numbers that we will get in the nearest couple of weeks prior to the next meeting will happen on the 20th of March. Speaking on the technical picture, here guys, mostly everything remains the same, but few moments we have to discuss. So despite the big sell-off that has happened here, we do not know what the numbers will be. And from that standpoint, technically, market still has at least theoretical chances on upward direction in a way of some kind of the double bottom pattern or something of that sort in a lower time frame, which theoretically could trigger upward bounce, especially if numbers will be not as strong as it could be. So from that standpoint, we should not ignore the possible pullback here. Besides, we have the weekly background for that, which is a Brent bottom setup on the weekly chart, and actually this is strong bullish reversal week that we have. Yes, retracement right now stands a bit more too extended from a technical point of view, but here is the explanation that it was actually due to the external factor, which is a Jerome Powell speech. So and theoretically, it seems that the bulls could just jump in and trying to make the bet on the possible poor non-farm payrolls numbers and anticipation of the possible upward action. Besides, here is some hints on some possible grabber exist, although we haven't got it yesterday, but theoretically it might be formed today. But here are some nuances exist. First of all, on the 4-time frame chart, since we're talking about this double bottom, and it is still 2 sessions until the payrolls report, today and tomorrow actually, with a so strong sellout that we see here, as you can see, acceleration. So each next candle is becoming even stronger than the previous one. So you can see there's some strong action. In the current circumstances, I wouldn't consider taking the long position until I will see the clearer pattern of the Russian trends. So gold market is very cunning, and it's very rare leaves behind the really juicy lows and stops that have been placed below it. Besides, for the double bottom pattern, the Russian rings on the second bottom is more the rule rather than some exclusion. So that's why in the current circumstances, due to this momentum that we have, I would prefer to consider more bullish signs before taking the long position. That's the points that I would like to say today. So if you're considering taking the long position, you're trying to make the bet against the payrolls, so that's, I think, the moment that it would be better to consider. Once you will get the Russian range, the market will collapse, taking out of these lows and will show us, and then fast return at the back up. That will be the point that you could start thinking about the position taking. If market will just collapse and stand below the lows, it would be better to not buy. It's just because it means that no double bottom will happen, the market will just keep going lower. You probably will see it by the numbers that we will get. Second moment, if you'll take a look at the hourly chart, here is actually yesterday was was completed, that we talked about the pullback to the 30%, which we said nice opportunity to go short. It's a kind of the Brent body look like, so market hits the 30% and just collapsed. And with the relation to all the stuff that I have said, here I'm not excluding that it might be in the way of some butterfly, and it probably will be the 1618 butterfly, because if you'll take a look, 127 butterfly target stands above the previous lows. but stops stands below these lows. So it means if butterfly will start forming, the most probable bottom will be around 70.99, 80 even. So market will just collapse. Once it will touch the stops, it will bring more fuel for downward action because there will be selling stops. And market will just move slightly lower, let them complete some butterfly here maybe. In particular, you could keep an eye on this pattern. With a fast return back up, head and shoulders might be formed there. If this will be indeed bullish background and indeed bullish reversal, that could trigger the further upward continuation. That's what bulls have to keep an eye on. Until this will happen, theoretically, you could try to ignore all this stuff and just take in the position, placing stop below the 18 even. That is also an approach. You could do this, but you could just get in the wrong direction if payrolls will be really strong. While using this more advanced approach for a position taken with the watch range with the butterfly, lets you to avoid these non-pleasant moments, and you will take the position only when the watch range already will happen. And consequently, for the bears, currently, if you haven't taken position here, I do not see a lot of things to do. So theoretically, you could try to just take the bet on the possible downward continuation reaching of the 18, but currently, at this point, we do not have any clear bearish continuation pattern because major pattern already has been formed. If you have taken position here, that's great. You could move stop to the break even and just see what will happen. For a new position taken, this is a bit tricky moment. And from that standpoint, I would prefer to wait either the breakout on the daily chart, this support and downward continuation. It means that market is going to the 1750 support, or if really bullish reversal will happen, in this case, it will be better to wait when the upward action will be over, because market could show significant upward action and it's a bit tricky currently to take the new bearish position. So that's what I would like to say on the gold market right now.